that point. Lindsey Graham, at this point, I don't know what he became sort of a lion of the saying. He's like, yeah, I heard what he said. He said, don't you understand bluster yet? Haven't you seen this guy in action for the past 2.5 years where you just, he's not going to forbid everyone to ever go into China, but he was mad when they did the tariffs on Friday. That set him off, right?
Well, who the hell is he?
What's that?
I said, who the hell is he? What does he matter? We put him on TV because we walk a mile for a camera. I know he's the center. There's only 100 of them. Feel bad that I just said it that way. But what matters to me is that you can trade the futures all day long betting that the president's a liar, but the futures are up. So right. I don't really care.
Right. All right. Anyway.
And by the way, I want to reiterate again, if we're starting to trust the PRC and we distrust our president, that's fine. But I'd like to have some evidence that the PRC tells the truth. Some evidence since 47 that the PRC tells the truth.
Right. Then where do we go? So we either, there's...
Well, how about we buy good quality stocks?
Right.
I mean, anything matter with that? Let's just be like Warren Buffett. Let's go buy some good quality stocks in a weakness. Look, I'm very cynical about this, but the idea that the president's a liar and the PRC tells the truth is too hard for me. I think it's probably somewhere in the middle.
Right, like so many things. All right, Jim.
Well, you and I know that.
Right.
You and I agree with that, don't we?
Yes. Yeah, we do.
Thank you.
We do. And 600 points isn't what it used to be, although, we were up.
Divide by 10.
Yeah, right.
You got to divide by 10. When we started working together, divide by 10, it was kind of a nothing day.
I remember.
Sorry.
I remember the Joe Granville crash was 28 points on the Dow.
Oh my! He said sell. Yeah, that was a suboptimal call.
Before these Pharaoh outfits.
That's like taking Andrew Luck in the draft,
Oh man, I know. Do you see OJ? OJ so mad.
Wow.
As Mike said, that guy can't get a break.
Yeah, exactly.
Pin that on me.
Yeah, it's true.
It is true.
All right, thanks.
For it.
We'll see you in a couple minutes.
Thank you, guys.
Don't miss an exclusive interview tonight on Mad Money with Starbucks CEO Kevin Johnson. That's at 6 p.m. Eastern Time. Stay tuned. Squawk Box will be right back.
2, 1, fade away.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids, with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Did you know Currys PC World do business, saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs and more. Top brands like HP, Microsoft, Epson and Sony and even more. If you find it cheaper from any major retailer, we'll match it. New deals added for this bank holiday weekend only. Deals that are too good to miss. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
You're in charge of hiring and Indeed has solutions, like our library of job description templates which are free and easy to customize. We also give you the pigeon of perception, who only coos when you find the perfect CV, or when he's hungry. Okay, no pigeon then. But there are free job descriptions.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/start today to use our library of completely free job description templates. Terms and conditions apply.
Fancy throwing something different on your barbecue this summer? At Asda, a pack of 2 cod fillets are only £3.19. And a 4-pack of Grower Selection sweet corn cobbets are just £1. Bring it home with Asda. Save money, live better. Selected stores online, subject to availability. Card 260 grams.
Some of the best levels we've seen on the futures. Welcome back to Squawk Box. Let's get a check on the markets. 280 now. Seen on the Dow, the NASDAQ indicated up about 90, 91. The S&P indicated up 27. Here's Europe, which was mixed. There was one bourse was down, the others were up. We'll take a quick look at Europe right now. Same as it was. FTSE's down a little. The 10-year got as low as 144 earlier before the yield backed up. Now 154. And finally, take a quick look at the dollar. And the dollar, as you can see, against the euro, the yen, and the pound. We got a little more time with
Mohammed's here. And Mohammed, okay, it's been a little bit of a roller coaster ride this morning. Do you feel like you understand things better 3 hours later, having kind of watched what they've all said and seen how the markets have reacted?
So what I do understand is that these markets don't have a solid anchor. Yeah. So we will be taken all over the place by comments and everything else. And that's, I think, the reality, and we have to realize that that's the world we're looking at. It's so fluid, economically, socially, institutionally.
How much of that do you think is, I guess, exaggerated by the idea that there's not as many people around, the liquidity is rather low, or do you think it would be even heavier if you had everybody back here and trading and kind of following too?
So I do think it's exaggerated, but I think there's a bigger point we've talked about, which is over the last few years, because we've been able to rely on ample and predictable liquidity from central banks, the system has oversold liquidity. We have promised too much liquidity to end users. And what I worry about is that when we get to major adjustments, you're not going to have it. And you see it already in emerging markets. You see it in parts of high yield. There simply isn't as much depth liquidity-wise as before. I would say something. This is a better market for the professional investor than it is for the retail investor.
What do you mean?
Because the professional investors can focus on things like dislocated areas. They can complete market in private credit.
Or move in and out more quickly.
They can move in and out more quickly, but most importantly, they can go where markets have broken down. And there's certain areas of private credit where that's really attractive. For the retail investors, it's about, I think, don't fade the U.S. Be careful of people saying just go into emerging markets. It's too early. And secondly, I think importantly, don't just chase the darlings of this market. If we are truly entering a period of deglobalization, the leaders of the next phase are going to be very different from where we've come from.
Mohammed, it's always a pleasure to have you with us on set. Thank you for your time today.
Thank you.
It's really been great. Mohammed El-Arian, again, and very quickly, you can just see 311 points that the Dow is now trading up. So that's near some of the higher levels that we've seen through the course of the morning. I saw up 350 at one point when the president was speaking. Right now, up 305 with the S&P up 30, the NASDAQ up by 99. Mike Santoli, thank you for being here today.
See you tomorrow.
We'll see you on Closing Bell later today?
Absolutely.
All right, that's it. That does it for us today. Make sure you join us tomorrow. Right now, it's time for Squawk on the Street.
Good morning and welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We are live from the New York Stock Exchange. Carl Quintanilla has the morning off. We get started with what promises to be an interesting week. Aren't they all? Take a look at futures, of course, as we open for trading a half hour from now. Those futures have erased big losses overnight. And as you can see, the market is looking higher. Of course, this in part on news out of the G7 summit. President Trump saying China called U.S. trade reps and asked to get back to the table for talks. That said, the editor of China's Global Times, who is fairly influential in these things, I believe, followed saying in a tweet that both sides did hold phone talks in recent days, adding that recent contacts don't have the significance the president suggested. President Trump and Treasury Secretary Mnuchin were asked about that report, and here's how they responded.
I don't know what you mean by that. Low level? The vice premier is low level? I don't think so. I mean, it's in your mind at low level. What is the position of the gentleman that was quoted in the newspaper today?
Well, the Vice Premier Leo came out with very significant statements, and we've been communicating through intermediaries back and forth with them.
He's the vice premier of China.
Yes, sir.
But that's not low level.
I understand. I agree. I was just, there was a statement that the spokesman for foreign ministry, for instance, that they weren't aware of the calls happening.
I don't know about a source.
There's been communication going on.
At the highest level.
President Trump and his French counterpart Emmanuel Macron will hold a joint news conference, perhaps as soon as a half hour from now. We'll see. But when it is held, of course, we will go live to it. Jim, a lot to digest this morning. I guess first thing I would simply share to you to bring it back to the markets, making my usual calls this morning of a number of asset managers, you get sort of a resounding theme, which is this is an untradeable market. You can't take meaningful exposure. There's no way to handicap the next headline. What do I do?
You know what? That is absolutely right. I think that's perfect. I've struggled with this too, and I realized that the people who sold last night when they were down 300, the people who bought this morning up 300, they really don't know what they're doing. And it would be far better just to recognize that the manufacturing economy is slowing, the consumer economy is holding up. And if you decide that you want to trade off tweets, off the PRC, off phone calls, off no phone calls, you're just doing exactly the opposite of what investing is. That's just a way to lose. That's buy high, sell low. And I think what we have to do is step back and just say, look, we don't know what's going to happen. We know that the president is determined to make it so that the Chinese have a weakened economy and that our companies move out. That's his determination. Whether there's talks or not, that's what he wants. So I think that you have to take him seriously and be careful if you own the companies that have a lot of exposure. You have to accept the fact that they have a lot of exposure, their number's going to come down. You have to accept the fact that if you're related to manufacturing, because of all the turmoil, moving to Indonesia, moving to Malaysia, it may not even be safe to move to Vietnam if they think it's just transshipment. So give it up. Own what you can. Accept the fact that there's volatility, but don't think you can play the volatility.
Right, but does that also mean that, at least based on the conversations I've had, that money is not going to go into the market, that there is going to be a more substantial cash position amongst those who normally would be, for lack of a better term, fully invested?
Right, I think that the real struggle here is, do you buy a company with a stock that yields 3% based on dividends, treasuries, comparison? That's what I think the market's up against. And the answer is 3, maybe it's 4%, maybe it's 5%, given the fact that you've got tremendous volatility on the manufacturing side. But let's think about what happened just last week, and it was last week. Target reported a great number.
Yes.
Okay, that's not going to be taken away. It's not supposed to have happened because of the tariffs. Someone may say that the next round of tariffs could hurt Target. What happens if Target comes out and says, I'm using Target as a metaphor, then it's not really going to hurt us. So what I end up thinking is, if we get jobless claims that spike and we get unemployment that goes up, I will be more negative. But right now, I think, and I didn't like the way the president said who's worse for the country, she or Powell, because Powell is
that was one of the president's many tweets.
That was a shame.
Was it Friday, I believe?
Right, that was a shame, because he may think that she is a great person, but even though I think Powell should have been more about how we got to lower rates, I don't think it's fair. He's a patriot. He's an American. But I do think that when you take away what happened over this weekend, you do recognize that the Fed is not necessarily a friend of the investor. So that's why it may be 4%, maybe 5%. But I think that's the dilemma people face, is do we own high-quality companies with good stocks? It's not tweets. That is not how you invest.
No, particularly even when there are debates about whether phone calls were truly made or not made. And you have Chinese trade officials hoping for a calm resolution. I want to get back to that for a moment.
The Chinese lie, and I mean, look, you can't invest. Just try to figure out whether Bristol Myers is right.
Although, I will say, listen, we all try, and it's not as though we're talking to the Chinese leadership. At least I'm not. I doubt that you are. So understanding what exactly is going to be next, particularly from the Chinese perspective, is important, but largely unknowable. That said, we can all do our best to talk to people we know have good relationships there. My read from those people is they think the Chinese may be done for a while, that they may be pulling back for a bit and saying, we're just going to let this play out for a bit before we really try and re-engage. Maybe the interdependence between our two economies will be made more stark and real if we wait a while and watch things decline. We'll see. I don't know if that's the proper read, Jim. It does seem to go in the face, at least, of what the president is claiming here in terms of these phone calls. But it's hard to imagine they get anywhere, given things have only ratcheted up in terms of tensions.
I agree with that. My read is just that, remember, the G7, what are they saying to the president? Most of the countries in the world, 3/4 of their trade is with China. So the pressure that he is under to make it so that the rest of the economies don't fall apart is pretty great. The pressure, he didn't want to crash it. I know this. He did not want the market to crash.
Trump. Yeah, of course.
So, the pressure, specifically crash. So he certainly is under pressure if he cares about the stock market. Now, on Friday, he didn't care about the stock market at all. He was willing to send it down.
And make jokes about some third-level candidate who pulled out of the Democratic primary being the reason for it.
But I do think this, David. The president genuinely believes that the one thing that the Chinese can't handle is unpredictability. And so he wants to be as unpredictable and wily as possible, because if they think he's crazy, then they might want to do a deal. They're very conscious about the fact that Elizabeth Warren's now the front runner. You read the New York Times, it's Warren versus Trump.
Warren is not going to potentially be any better for them.
It's actually worse.
That
because
said,
she cares
again,
about the American
this idea,
worker.
though, that if you take some time and if the economy worldwide does start to decline, but you get people to understand there is true interdependence here that can't just be discarded. I've asked that question any number of times. How bad is the pain in China? And certainly there is significant pain. That said, you're talking about 1.3 billion people with a savings rate of 70%.
Right.
They can get through it.
Well, we're talking about how many, 19 trillion economy. Trump thinks we can get through it. What I think is, don't think that
we are getting through it so far.
But the stock market is going to react because number cuts send stocks down. Let's use the paradigm of Emerson versus Bristol-Myers. Bristol-Myers does something this weekend that's very positive. Now this deal is going to close,
which we're going to talk about,
and that's very positive
in a bit.
Emerson numbers have to come down because they do a lot of business with China, and we have to be suspicious. I have Kevin Johnson on tonight.
Yes.
If he tells me that Luckin Coffee is taking share, or that they've seen any diminution of business, then obviously Starbucks doesn't deserve to be at 95, 96. But if business is as usual, Starbucks is shorted, it goes to 100.
It's funny. We've wondered about, would the Chinese go to sort of an asymmetric response, being boycotts, pushing nationalism? That doesn't seem to be where they've gone yet.
No, and I think
nobody should have been surprised that they responded with tariffs. They've done that every time. Right. But they seem very hesitant to push the boycott and the nationalism button.
Right. It's interesting that the administration was hoping that the narrative on this morning's show would be about the big Japanese deal, which didn't lower tariffs on their trucks and cars, but did make it so that there's a lot more agriculture. And I think they felt that this was going to be what we talked about. Obviously, we got derailed in terms of what we're talking about because of the tweets and the Doral, which was an odd comment. I don't know if you heard that one, David.
I did.
That the Doral is why the talks might go well. Now, obviously, once again, the president would say, being a little facetious, but when he says it, you just say to yourself, all right, this is a lighter president in terms of hey, we're all going to go to Doral. He's just talking. You and I are talking. We all expected that it's Obama. And Obama was all about showing tremendous respect to our allies. The president was like, hey, they're just allies. That's all they are. As if, and he has a different view than any other president in history. Jefferson was the first guy to say, listen, we got to respect them. Even Adams said we got to respect them. This president doesn't care.
Back to the economy for a moment. We did get U.S. July durable goods orders up 2.1%.
Right.
That's new orders for long-lasting products.
That buttresses the call.
And that was well ahead of what had been expectations. A lot of it seems to have been due to civilian aircraft and spare components. That was up 47, almost 48% in July from a month earlier. But nonetheless, it was, if you're looking for sort of a reflection of underlying business investment, not bad.
No, not only not bad at all, but surprising. Although I still won't touch manufacturing because I think that these companies have to move their supply chain. And David, let's face it, if you were to start building things in Malaysia, you couldn't do it in 9 months. I know the president feels adamant that if companies had taken them seriously, they would have had a chance. They would have had maybe as much as 15 months to move their supply chain. David, I know we were about to have Hasbro, something happening at Hasbro, but the fact is that Hasbro can move a toy factory, but it's very hard to move a semiconductor factory.
It
takes Intel 2 years to build these factories.
Those are highly complex products, and it's not as though you can just pick the phone up and say, okay, move it to Vietnam. Let's, of course, as we wait news from the president, and he continues to move markets around the globe, let's get to Bob Pisani for more on the broader markets. Bob.
Good morning, everybody. Happy Monday. Seems like a long time since Jackson Hole, doesn't it? In fact, seems like a long time since Sunday morning. Just look at the S&P futures. We're talking about almost an 80-point move in the S&P futures. That's better than 700 points from the bottom down here, which is Sunday. And then all of a sudden, you have the president doing some tweets about China negotiations starting. We're still trying to find out the extent of these new restarted negotiations. We don't know exactly, but you can see the big move that we've had up here. I think the problem the markets are having right now is figuring out who exactly is showing up and where are the negotiations. We don't know, because we saw on Friday a very angry President Trump talking about China as the enemy. We saw on Monday a much more reasonable President Trump talking about the great leader, Mr. Xi, over in China. So who is showing up for the negotiations? The big question, of course, the only one that anybody cares about, is the timing really right for a trade deal? Let's face it, we've all become political analysts at this point, and the answer is it's not clear at all. It's not even clear if the main participants know if the timing is right for a trade deal. So how is everybody else supposed to know? That's the problem the trading community is having right now. So you've got a situation right now where it puts pressure on stocks. Basically, you sell into the rallies at this point, and even the bulls are arguing we're range bound at this point, and that's the bullish position. Part of the problem is it's hard to argue a rotation play here because the safety trade, the REITs, the consumer staples, utilities, and we're all tired of talking about this, they have been outstanding performers this year. They're overextended. Most of them are near historic highs. Utilities routinely show up on the new high list, and they're overbought dramatically. So you can't say, let's rotate into defensive names. The cyclical names, the deeper cyclical names, if you take a look, it's true technology has outperformed. There is your one performer. Really, the S&P is up about 13% this year. But deeper names, industrials, banks certainly underperforming. Energy is a complete disaster. Deeper cyclical names, it's hard to argue let's rotate into them because they're lower priced because we have so much trade uncertainty. If you assume it's going to be hard to get a deal, it's hard to make that. So the rotation story is a lot harder to make at this point for the market. That's why even the bulls are arguing we're range bound. One thing is absolutely for sure, this year, it's living up to its reputation for August, at least, being a rotten month for the markets overall. There we are, down 4.5% year to date. Remember, S&P is up about 13%. A lot of comment about the volume on Friday. Just want to note we had very heavy volume in two main ETFs. That's the Spider ETF, that's the S&P, SPY, and the Russell 2000 symbol there is IWM. Volume was 2.5 times normal. One thing I do want to point out is that these instruments are so big and so liquid now that they are themselves separate markets. They are used by the active trading community to hedge. So on Friday, if you look at the volatility, the ETF, you look at what's going on with that. The volatility index, you see the big spike from 16 to 20. What happens here is people are reaching for protection. They're concerned. They're buying puts. Who are they buying puts from? They're buying it from the dealer community. The dealer community is now long markets, and to protect themselves, they go out and use these ETFs, the SPY and the IWM. So my point is, ETFs are used tactically now by the trading community to go long and to hedge the market situation. So yeah, you see big volume on days when we're down. That's largely because of the trading community going out and protecting themselves using puts overall. So right now, we'll see how the market opens. It's going to be a very interesting day. Guys, back to you.
All right, Bob. Thank you, Bob Pisani. Up next, we'll get Jim's Mad Dash. Of course, we are counting you down to the opening bell. We've got about 15 minutes before we get the open here at the NYSE. A significant turnaround taking place in the futures, at least. Of course, we are now looking for a far higher open, given some of those comments from the president about potential talks with the Chinese. We're also waiting, by the way, for President Trump and Emmanuel Macron. Their joint news conference at the G7 is coming up.
We trust USA more than any other company out there. They give us
hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids chooses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
You're in charge of hiring and Indeed has solutions, like our library of job description templates which are free and easy to customize. We also give you the pigeon of perception, who only coos when you find the perfect CV, or when he's hungry. Okay, no pigeon then, but there are free job descriptions.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/start today to use our library of completely free job description templates. Terms and conditions apply.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with a touch of a finger, you could quickly pay your bill or book in a boiler service, leaving you more time to fire up the barbecue or just relax with a good book. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
Let's head to the bond pits. Join Rick Santelli at the CME Group in Chicago. Rick.
Good morning, David. Well, everybody, of course, has been talking how wild it is. And indeed, the distance in some of these moves very large. But Treasuries, for the most part, still rather orderly. Now, everything on the curve right now is down 1 basis point because we briefly extended our losses from Friday's volatility. And what's fascinating here is you look at a 2-day chart of 2-year note yields. It had the same intraday low as 10s did. Look at a 1 week of 10s, right at 144. The difference is that currently, right around 147 is the low cycle close for 2-year notes. We're now at 152. Cycle close for 10-year note yields is 153, right where we're hovering. So we're hovering at 3-year lows should we close even a smidge below that level. And also keep in mind, look at a 1 week of boons. Treasuries were steady Eddie until Friday, where they dropped down and they're recovering a bit. Bond yields have been much more stochastic, much choppier. And it ought to be said that during our volatility Friday, bonds largely missed a bunch of that with regard to their time zone. And indeed, they're actually up a bit. They never really moved into that minus 71, 72 area. That's their historic low yield. Now, granted, it's not a huge cushion, but it shows that there is a bit of divergence here. We want to pay close attention to the difference between 10s and bond yields. It gives us a better way of handicapping how some of the trade volatility is creating a flight to safety more in U.S. Treasuries. Finally, if we go back all the way to July of 2016, so many things on this chart. It was July of 2016. We had the second of 2 bubble bottoms, the first in July of 2012, right at 137. You see on the far left of your screen. But having said that as well, we're still just hovering not much above that level here in the low 150s, and many traders think it is going to be trying to challenge those long-term support levels. Finally, the dollar index, another steady Eddie. Look at the dollar index for 1 week up until Friday. Similar to 10s, not a lot of volatility. Dollar's more in an extreme upper end of its 27-month range, or 10-year note yields, of course, is extreme at the bottom, but marching along ever so steady for the most part. David, Jim, back to you.
Rick, thank you. Rick Santelli at the CME with the bond report. All right, we got about 10 minutes before we get started with trading here at the New York Stock Exchange. Let's get a mad dash in ahead of that market open. Apple.
Very thoughtful piece by J.P. Morgan talking about while tariff-related earnings risks do exist, there is a decline in the bill of materials, what it costs to make an iPhone, particularly a decline in DRAMs. And that means that even if there is a 10% tariff, it won't be that bad, even if Apple had to absorb it. Apple, 55% of iPhone revenues is iPhone. The other 45, of course, they talk about is not talked about enough, which is the watch, which is growing really incredible. And I think that one of the things that we got to start talking about again, revenue stream of service, because what the iPhone service revenues they think are going to continue to grow. All I'm saying is that this is the stock that's most footballed, so to speak, because they do have a lot of China exposure. What you mentioned earlier, that there's no boycott. But what matters to me is that I didn't think that the decline in costs would be that positive for Apple. But we should realize that all these companies that in the semiconductor world are under pressure.
Right.
And that redounds in favor of Apple.
Right. So conceivably margins expand enough to offset the 10% tariff.
Exactly. I should have said it that way. That's exactly right. And so that makes JP Morgan even more positive. I know that the stock acted horribly on Friday. I know it's the stock that reacts the most. I think what this piece is saying is basically stop thinking that don't react so heavily anymore, because you're not thinking about all the other good things. And I like the piece because that's how I feel that service and watches could eventually come on, and David, TV could make it so that Apple iPhone is less than 50%.
All right, we got President Trump and French President Macron set to hold a news conference. That, of course, from the G7 summit in France. We will bring you live coverage. Let's give you one more look at futures before we get started with trading here at the New York Stock Exchange. We've got a lot more Squawk on the Street live from Post 9 when we come back.
The Bond Report is sponsored by PIMCO.
Are we supposed to dance?
Boy bands without dancing are just okay. Get a better than just okay unlimited plan with Spotify Premium included on America's Best Network. Only from AT&T. More for your thing. That's our thing.
I can't believe it. Has Sophie opened up a wormhole through time?
Elle ne va pas, non?
Hip, hip.
Regardez-moi! C'est complètement de ta faute!
C'est moi. Je m'apporte.
No, I can't believe how easy it was to save hundreds of dollars on my car insurance with Geico.
Believe it, Geico could save you 15% or more on car insurance.
You spend days researching bed sheets. And weeks picking a dog bed.
So why would you settle for just any bed?
Just do what you do with everything else.
Ask the internet.
Ask your friends.
Ask your coworkers. We're pretty sure they'll send you over to us.
Because we're not just a bank.
We're an ally. Ally, this is Pamela. How can I help you?
High-growth companies need to ask themselves, what is the right path to accelerate growth?
EY has taken the time to really understand the challenges that we're facing and our vision for the future. Veridesk is a company that has evolved to offer a full suite of office products to develop fast, flexible workspaces.
Veridesk is building something incredible, and we are extremely proud to be a trusted business advisor.
We know that China is slowing, right? And while that's good for us in terms of winning the trade war, it's terrible for the global economy. When you adjust for inflation, these numbers we're seeing from China, I think they're downright alarming. The tariffs are devastating them, and that devastation is spreading to their other trading partners. I have it.
There's a look at futures. Of course, we are looking for a higher market open 5 minutes from now. When we get that opening bell, all the major averages, as you see, looking for a rebound from that sharp sell-off on Friday.
Manafort was motivated by power and money.
Influence and excess. Political insider takes a hard fall. All new American Read, Paul Manafort, tonight, 10 Eastern, CNBC. Get yours.
Hey, America. Do you feel like you're constantly squirming to get comfortable in your outdated underwear?
If so, you know these awkward adjustment moments all too well.
The wedgie shift, the party pick, and the hide and seek.
You won't have those problems when you upgrade to Tommy John.
Our underwear is made with a luxuriously soft, lightweight, breathable fabric that stretches in 16 different directions. It stays put so there's no bunching, no riding up, and no more wedgies. Guaranteed.
Our stay-put waistband won't roll down or leave marks, and Tommy John underwear is designed for maximum breathability, which means you'll be cool and dry all day long. Overcome the uncomfortable
with Tommy John.
Visit TommyJohn.com now and use the promo code on your screen to get 20% off.
free shipping on orders over $75, and our best pair you'll ever wear or it's free guarantee. Experience the world's most comfortable underwear. Visit TommyJohn.com today. Tommy John, no adjustment needed.
When it comes to your customers' expectations, there's one thing you can be sure of. They're changing by the nanosecond. That's why Cognizant created a unique engineering approach to design and build new digital products. Learn how Cognizant Soft Vision designs experiences and engineers outcomes.
Here's some good news. You can control your mortgage, as long as it's a Yorgage, the fixed-rate mortgage exclusively from Quicken Loans that conforms to your needs. With a Yorgage, you control your home loan term, anywhere from 8 to 30 years. That custom term can help you finish paying off your mortgage in a time frame that works best for you. And by taking years off the loan, you'll potentially save thousands of dollars in interest over the life of your mortgage. Right now could be a great time to take some positive financial steps with a cash-out refinance from Quicken Loans. You can use the cash from your home's equity to make some much-needed home improvements or reduce nagging credit card debt. A great way to take cash out is with our most popular loan, a Quicken Loans 30-year fixed-rate mortgage. Here's one more reason you'll want to work with us. We're #1 in the nation according to J.D. Power. To learn more about how you can leverage the value in your home, call us today or go to rocketmortgage.com.
You're watching CNBC Squawk on the Street. We are live from the financial capital of the world. We've got an opening bell going to ring a little less than 2 minutes from now. Of course, this following a significant down day in the markets on Friday, given the deterioration in the relationship between China and the U.S. with increased tariffs from China on U.S. imports there, and then the president's response by moving up percentage-wise existing tariffs and just getting kind of mad. Although then today or this morning in France saying there are some phone calls that indicate the Chinese want to do business.
But we have not seen a rollback of what he said on Friday.
Right.
And I think that's the most important thing. If he had said, look, I'm going to, you know, what I said on Friday, they brought him to the table, we're going to walk those back. Instead of just saying maybe we will, I think that what would happen is people would say, you know what, there could be movement here. There wasn't, and there's still no purchase of anything. I think that your earlier comments about a siege are right. I think that maybe there are people in China who think that you could have a recession here.
Yep.
Not hard. There's a lot of people come on our air and say
I believe there were 341 rounds of talks between the Chinese and the Americans between the 1940s and 1972 when we finally recognized China under the Nixon administration.
Well, there you go. They played a little Joe and Lie.
Yeah.
He was always a crafty fella.
That's a lot of talk.
Yes, it is. But I think that the idea that, well, you won't be discussing exactly where we are 3 weeks from now. So let's forget that and recognize manufacturing is weaker, the consumers hang in. That's really the thesis.
All right, we're going to get an opening bell, and Jim and I are going to start to get to some of the stocks that we're watching as well this morning. Here's the opening bell. Here's the analysis. You can take a look at the real-time exchange back at our headquarters. Maybe a lot more green there. Healthcare company Abbott celebrating Women's Equality Day here at the New York Stock Exchange. Over the NASDAQ, TCF Financial. It's a Michigan-based financial holding company doing the honors.
Twin Cities Financial. I'll tell you, David, we are on Friday afternoon. There was a sense that the bull market's over, and we have dealt with that forever. The bull market's over. But the last 4 weeks have been very disconcerting to those who buy the industrials, and I think that's correct. I think the industrials numbers are coming down.
You do?
Yes, I do.
And you do think that because
I think that it's not China, it's the rest of the world that they sell into. And people don't realize how China has ingratiated itself and really played globalization to the point where if you are a country, any country, you're more worried about China's economy slowing than you are about anything else.
Right.
And you wish that the United States would stop it so China would still buy things. And that's what I think, as you mentioned, China is being hurt. China may play a long game, but all of its trading partners don't play a long game. And I think that they're very concerned, and they're frozen. Someone earlier on was recommending the emerging markets. I could not think of a worse place to be. The emerging markets have to deal with a strong dollar, and the emerging markets really need China to go into higher gear. And that's not happening. Going to lower gear. Can they keep it above 6%?
It would seem to argue then that when it comes to equity markets, we're still the best show in town.
Well, the ones that yield wellness, I keep coming back to yield. And now the strongest group, the REITs. The REITs are overbought, but REITs offer tremendous... there's guys who are fighting to recommend REITs and still haven't moved, like Vici. Vici is, I came on calls, Concord, whatever that. Yes. But yeah, so you have this kind of Vici Properties, Morgan Stanley, increased defensiveness and expanding acquisition, upgrade to overweight. This is really a simile for this market, which is to say, what you really need to do is find something with 4% yield. We should have Barry Sternlicht on, because Starwood has a very big yield, and I think he's pretty bankable.
There are quite a few significant yields out there. Of course, always think of Verizon or AT&T.
Right, I like that.
Have significant yields at this point. Very different business models, though. Always important to point out. Right. They don't trade in unison anymore either.
No, they should.
They trade very differently and probably should. Because
how much can AT&T refinance?
I don't know.
Yeah.
I don't know.
I think they need to.
And we're going to talk in a moment about Disney's streaming service, of course. I think seen in contrast to a certain extent to what the plan is at Warner, which is owned by AT&T. But let's start off with a deal this morning that you and I both kept a close eye on. Bristol-Myers announces an agreement between Celgene and Amgen. They're divesting a key treatment for psoriasis, $13.4 billion. Now, they were forced, Jim, as you know, having followed this closely, to divest it. Right. It had the effect of delaying the close of Bristol-Myers' acquisition of Celgene. They get a good price. And the fact is the spread between what the deal was worth and where Celgene is trading has closed. You can see it. And Bristol-Myers also benefiting a great deal this morning overall.
Dr. Giovanni Caforio, I've been going back and forth with him. Man, I greatly respect. As you recognize that Bristol-Myers, the revenue stream has been challenged by Merck. Okay. This deal, I thought they'd get $10 billion max. I was very afraid that Bristol-Myers would not be able to reduce the debt that they have taken down to buy Celgene. Crafty Giovanni makes a lot of money, but my travel trust owns Amgen. The stock was down 5 point. Amgen is desperate, David, for more revenue streams until their cancer drugs play out, until Aimovig, their migraine drug, plays out, until Repatha, their cholesterol drug, plays out. So they got Enbrel when they had a New Jersey win, and now they have Otezla, which is a very big drug. And what I would tell you is that there's two winners here. But I really believe the winner may be the Celgene people who now know the deal's going to close. And maybe the deal closes by year end.
Right.
And that's fabulous. And Bristol-Myers, David, notice it only yields 3.3 now.
It does.
So I my hat is off to Dr. Caforio. People really sold him short. They really did feel that he wasn't going to get a lot of money for this.
They got a very strong price.
Yes,
they also, by the way, are increasing what was a previously announced planned $5 billion accelerated share repurchase. It's now $7 billion, in part perhaps because of the overage, so to speak, more money that they got for this asset
I think
that they didn't want to sell in the first place.
No,
we should point out
they were surprised.
They were surprised they had
the government really. It was like, holy cow, Tesla! That is the non-Revlimid drug, and it's got a $2 billion stream out the years. But wow, good thing for everybody. My hat is off to Caforio. That deal's going to close. Numbers are going to go higher.
Let's keep it in this sector, broadly speaking, and talk a bit about J&J, Jim. Later today, the Oklahoma opioid decision is going to come. And there are many who believe J&J will get a negative verdict. The level of damages, though, is obviously going to be a key amongst how investors view it. Where is the award? What will it mean? And, of course, you go through the idea of appeals and everything else. Do you have any expectations here and/or how investors should line up here?
My trust owns it. I wouldn't touch it till after. I think that the likelihood that they will lose, I think people will panic. What I point out is the triple A nature of J&J's balance sheet means they can handle this. But, David, this has become the hardest. I don't know. My child owns it because we leave in Alex Gorski. This is the hardest one to own. You got talc. And that's just going to keep playing out. You got opioid. They wouldn't settle because they feel that there's such a small percentage. But you know how juries are.
Yeah.
They hate these companies. So the roll of the dice, I don't know how much is the judge, just the judge, but the roll of the dice here is disconcerting to shareholders.
Speaking of judges, we were both not here on Friday for Qualcomm's win, essentially.
That was amazing.
Where the FTC's ruling against has now been stayed by the Ninth Circuit. And so for Qualcomm, the shares of which were up on Friday prior to, of course, then the president's tweets, are rebounding a bit today as well. But this takes a lot of the pressure off. They don't have to renegotiate anything with anybody in terms of that FTC. It's a fascinating case. Remember, the Department of Justice has sided with Qualcomm versus the FTC, and now it's going to be decided in an appeals court. I think the arguments are set to begin in January of next year.
David, we always hear, and the president reiterated this weekend, that the government is, the regulations have really been pulled back. This is the most aggressive FTC and the most aggressive FERC I have ever seen.
We should point out, this was an FTC decision that was litigated, that was a leftover from the Obama administration.
But, it's not like he's stacked. The FTC is
no, but then somebody had to recuse themselves. It's always been a strange one for Qualcomm.
It really is.
But, of course, when we remember, Qualcomm stock price this year has been dramatic moves in all sorts of ways, but a dramatic move up on the Apple settlement, only to be followed not that much later by that very negative ruling by Judge Koh, which has now, again, been stayed.
Right.
So,
now, I actually am... I can't believe, David, this is how many times, I know the FTC holder, but the FTC, David, has gotten exactly the opposite of what President Trump would be saying. Basically just saying, hey, listen, we're going to be as aggressive.
Right.
I mean, you would think that they'd just say, listen, we're done, we're pulling back.
Particularly in the case of Qualcomm, which we've said the words, they don't national champion 5G, the strategy, of course, of 5G. Did you see, by the way, that Huawei came up with an AI chip that they're trumpeting and saying that is equal to what NVIDIA?
No, not supposed to happen. Not supposed to happen. And in my, in Jensen Huang we trust. I don't think anyone's going to touch. But NVIDIA always just has the next step forward. But I hear that. Dave, another thing that we haven't talked about.
I think it's interesting to note the advances in innovation potentially coming out of China. That's another part of why companies here may feel a need to be there to some extent.
Exactly right. Now, NVIDIA's got this deal. The Mellanox deal's right in front of them.
Yeah.
The Chinese, they continue to say on that conference call, Jensen Huang says that deal's going to go through.
Just waiting.
They'll
wait and wait and wait. That's the question.
Longer. Hey, there's big news. There's a guy named Rusty Brazil whom I follow for oil. Do you know that the next pipeline is now open for the Permian? And it's a very cheap, turns out that the pricing is very inexpensive. There's not a lot of tariff, so to speak. David, the world's going to be flooded with oil in the next 6 months from the Permian.
Because you've been talking for a long time about the lack of pipelines, but the fact that they were being built. Where does this oil then get taken, this new pipeline? For example, where does it come from and go to?
A lot of it
comes from the Permian. Where's it going?
It can go everywhere. It's not, it couldn't go to China, I guess so.
But what is it allowing for that hadn't been previously? What leads you to say that the world's going to be?
Well, because maybe you're talking about 2 million new barrels coming on soon. And remember I told you that we're going to go from 12 million barrels to 17 million, according to Scott Sheffield from Pioneer? Well, this is part of it. Remember, these companies, they wish that they wish they could hold back oil, but they have to drill in order to meet their obligations. They are not the Saudi Arabians. So you're going to see a flood. You're not going to see oil rally. I mean, think about all.
And now they've got more pipelines to get it to the export markets.
That's important. Exactly right. Now, there's a backlog of ships leaving Houston because the port actually isn't big enough to handle all the oil. But, you're going to have the Permian really be monetized. And I just think the price of oil is just going to go very low. I'm surprised it's still in the 50s. I think it cracks. And that's why I think a lot of the oil stocks are even worse. There was a very negative price target adjustment for Apache down to 20. David, I got to tell you, you know what's going to look back and we're going to say what was one of the dumber things ever?
What?
The Occidental buy, the Anadarko. I think that could have been done at 50.
Well, I mean, low 60s was where Chevron said, see you later.
See you later. And the debt that was taken down by Oxy, I think Ms. Hollab should come on to this show and talk about debt service and how there's not to worry. Because, David, I'm very worried.
You are?
Yes, because I think that Warren Buffett 8% money was an interest rate too far. And when I look
you're not alone. Carl Icahn certainly agrees with you.
Yeah, and when I look at the city piece on Apache, which is a similar story to Anadarko, they're lowering their price target to 22. This stock was in the 60s. Right. This is all in part because you can't flare as much as you'd like natural gas. You have to get there. But when the pipeline, all systems go, where is the world going to handle a couple more million barrels of oil without the price coming down? And China is not using a lot more oil than it was, and to argue that it's been same. So I think that oil is going to be continually a horrible story for the market. Horrible.
Yeah. Finally, Jim, let's quickly just take a look at Disney. They made a lot of noise on Friday. Of course, all of this about Disney Plus. It was a coming out party for a number of the original series that will be part of that streaming service. They had their biennial fan convention, the D23 Expo, where they unveiled a lot of things. We all know how central this is, of course, to the overall strategy at the company. It's going to be rolled out in November. I always think of it just the time and effort that has been taken at that company to make sure that everybody's on board, and that everybody has buy-in. As opposed to some of the moves that we've seen at AT&T's Time Warner division in terms of how they've dealt with what will be their streaming entrant now called HBO Max. Very different. Very different. And, of course, different price points, too. The question continues to be, will it in any way take share from Netflix, or will it simply exist in its own?
I think it can.
Disney,
there's only so many.
Disney Plus.
I know, but I'm saying there's only so many. Yep. The millennials can only take down so many services.
Yep. $7 a month.
Yeah,
that's
stock
all.
Was much higher. Now it's not. David, I want to be sure that people understand J&J. Just go back over.
Yes.
The judge is going to rule. It's a judge ruling.
Yes.
Probably less likely that the juries hate drug companies. Judge could be reasonable.
Right.
I just want to be sure everybody knows that.
Yep.
And just go back on the Disney. David, here's my worry about Disney. The stock's going from 143 down to 131.
Yes.
It seems there had been a belief that the valley could be looked through, because the next quarters are not going to be.
Well, the last quarter was not a good quarter. No. And there was some question there as to what, in terms of the performance of the Fox division and how much distraction there was, and whether it could have been overcome.
Admitted by Iger. Will that change this quarter? I don't think so.
I don't know. Right.
So the stock is getting hit because I think people are starting to say, I have a good game. Why do I have to be there through a series of bad quarters?
Yep.
And so we have to watch that. We don't know, but I do think that the Iger we trust is worth trusting, but you've got to be willing to take a lot of pain.
All right. We overall have a market that is up about 0.8% on the S&P, certainly better than had been anticipated, perhaps, when things closed on Friday, and certainly sent a bit higher as a result of some positive comments from the president about the potential for restarting talks with the Chinese, this after a good deal of heated back and forth, well, particularly from the president on Friday. We're also, of course, awaiting President Trump and French President Macron's joint news conference from the G7 summit. So let's get to Eamon Javers. He is in France, and he's got more for us. Eamon.
Yeah, good morning, David. We're running about an hour behind here at the G7 in France, so that we expected that presser at 9:30 East Coast time. We're going to get it probably around 10:30 East Coast time. At least that's the information that we're given right now. Things are a little bit in flux right here as the schedule bounces back and forth, but ultimately what reporters in the room are going to be wanting from the president is a little bit more substance to back up his statement this morning when he said that the Chinese side had called the U.S. to start negotiations. He said the Chinese wanted to go back to the negotiating table. He said this was a good thing for the United States. We got some skepticism from Beijing on that. Our Eunice Yoon in Beijing reporting that the foreign ministry there said that they didn't really know what the president was talking about or what he was referring to. There was a well-connected journalist who's connected to the Chinese government in China who suggested that ultimately there are no conversations of the level to which the president was talking about. So we've been pressing U.S. officials here in France who are traveling with the president for more detail on what exactly transpired overnight. They have not offered any detail. The president's been pressed on it a number of times when reporters have been able to get into the room with him. At one point, he's pressed on it. He said, look, I don't want to talk about calls. Secretary Mnuchin said there are high-level talks going back and forth, communications going back and forth all the time. So that's sort of where we stand as we wait for this press conference. And these press conferences can be lively affairs here because we'll have the whole world press involved, and the questioning can hit any number of topics A lot of tension points here. All the world leaders in France trying to get through all this without any major blow-up the way they had last year at the G7 when the president refused to sign on to that communique. Angela Merkel said it was depressing the way last year's G7 wound up. So this year they're trying not to have it land on a sour note. And as a result, they're not going to have any communique at all. They're simply not signing any joint statement at the end of this. So there will be sort of no outcome. The real meat of this is all the negotiations that are going on behind the scenes, guys. And we'll wait to see what the leaders have to say in about half an hour's time now.
Yeah, well, Eamon, as somebody who has followed virtually every comment from the administration on trade and anything else, whether it be in tweet form or during press conferences, I mean, it has been very difficult from an investor perspective to really ever know what is truly going on. Sure. I think. And by the way, then trying to understand what the Chinese leadership is doing is equally difficult as well. I mean, a lot of investors I know just throwing their hands up at this point in terms of trying to actually get some sort of sense as to what's really happening in these talks or non-talks.
I think that's a sensible posture right now. I mean, you remember where we were last week with this idea of we're going to go do some more tax cuts, and then the next day, no, we're not going to do some more tax cuts. This White House has been sending conflicting signals for over a week now on a whole range of topics, and we saw the blow up on Friday as the president said he hereby orders American companies to get out of China or to consider to look into getting out of China. Then the White House said, well, the president does have legal authority to do that under an obscure 1970s law, but he's not actually going to do that. Over the weekend, we had the president suggesting in response to a question that he does have some second thoughts about the China trade war. And then aides hastily went out in front of cameras to say, no, he's not softening his tone on the China trade war. What he meant to say is he has second thoughts that he wasn't tough enough on the tariffs on Friday. And Larry Kudlow ultimately suggesting that the president misheard the question. So there's been a lot of mixed messaging here. So I think if you're an investor watching all this, you might want to just be very careful with all the different messages that are coming out because we've seen them change, almost hour by hour over the course of the weekend.
Yeah, well, we appreciate you staying on top of it. Tweet by tweet, comment by comment. Eamon Javers trying to make sense of it all for us. Of course, we'll be back with Eamon later. We'll be covering live that press conference from both Macron and President Trump when it happens. As Eamon said, it has been delayed about an hour. Jim, any further thoughts on sort of...
Markets don't believe there are phone calls. Markets believe that the president is exaggerating or doing something that is fatuous, or else they'd be up far more because we were down so badly on Friday. I come back and say, listen, there's a lot of high-quality stocks that are up, but the industrials are challenged here, no matter what. Because everything that makes it so that the world is slower cuts their numbers. Cannot be bullish on the industrials. There are a lot of non-industrials, high yielders that I like. And there's some tech companies that are doing
Are you going to put together a portfolio of high-yielding stocks for us at some point that you think would make sense?
Yes. Okay. And it's because of what you just requested, because I do have enough in my head that I should do that. I've been lax on that.
That's all right.
I've been lax.
I mean, I always come back, of course, to and by the way, we haven't talked retail at all. After last week, it was all we discussed with all the different
That's where
earnings.
I've been caught up.
But I always tend to come back to Macy's, which I know you'll just say you can't touch it, even at a 10.2% yield.
Well, I mean, I think Macy's, look, so much of they've not decided, they've not gotten away from this foreign disease. They need tourists.
Right.
You keep hearing that. What they really need is a much better strategy online, and I think they're hampered by being in the mall. Almost all the mall stores are really different, really difficult. David, we're seeing a have and have not, and Macy's they've paid down a lot of debt. I just think that what's happened is it's just not interesting, and it's a yield play with very little upside. And I think that they have to demonstrate that they have to pivot and somehow say, you know what, we are going to go, we're going to do exactly what Target did. We're going to become a different company. They have to become a different company. And that's very hard for everyone.
Any company, that's a very difficult thing to transform. There's no doubt
It's really hard. You can't keep doing the same thing. That's not what works in this market. I like Kohl's, and I was wrong. I thought that their tie-in with Amazon was different enough, but I was wrong. And I think that you have to suggest that it's really got to be like a Target, like a Costco, like a Home Depot, which really, you read Mark Benioff's new book. It's not out yet, but you can reserve. I got an advanced copy. And what Home Depot did, recognized that, holy cow, we're behind. and they pivoted so hard. That's what Jeff Gannetta's did. I mean, you have to blow the company up.
That's not an easy thing to do.
No, it isn't. But Target did it.
Yeah, he did.
Cornell did it.
He did. Cornell did it. And the results are fairly, are quite positive.
The industrial's rolling over here.
Yeah, we're watching the markets here. The S&P hanging in there with a gain of about 0.6%, but that is down from its highs. You've, of course, seen the decline as well in the Dow. We are waiting for President Trump, French President Macron, both leaders getting ready to hold a joint news conference from the G7 in France. We'll have that live coming up right here on Squawk on the Street.
Why did you invest in gold?
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialize in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
You're in charge of hiring and Indeed has solutions, like our library of job description templates which are free and easy to customize. We also give you the pigeon of perception, who only coos when you find the perfect CV. Or when he's hungry. Okay, no pigeon then, but there are free job descriptions.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/start today to use our library of completely free job description templates. Terms and conditions apply.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
From the moment I saw you, the last of the litter, I knew you were the one, and would soon hear the pitter-patter of tiny paws on our kitchen floor, and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
Make sure you're uni ready with our huge range of practical essentials and home from home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with the touch of a finger, you can quickly submit meter readings or book an expert engineer, leaving you more time for watering the borders or a spot of sunbathing. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
All right. Yeah, we're combining stop trading and the key to this market, which typically I ask you around 9:31, but we didn't get to. So what are both?
On Friday, Salesforce was up 10, and then it got obliterated because it had an unbelievable quarter on Thursday. I think it was one of the best quarters I've seen from tech. It was a re-acceleration of all lines, and the stock would have been up big, obviously, if it weren't for the tsunami of selling. I need you to just watch it, because that one has room to grow, 4 more points before where it was.
You had Keith, right, it hadn't been a great performer so far this year in the market. You had Keith Block on as your guest on Mad Money on Thursday night.
And Keith Block, who's the co-CEO, I thought told a fabulous story of acceleration in almost every part of the business. And Tableau software not closed yet, David, because of British concerns. But when it does, I think you're going to see even more good news there. So watch that. I do think it should be higher, but I respect the fact that this market is treacherous.
It's been flat for a year. 12-month performance
versus Workday, versus Adobe, and I think it's time. They had a good year last year, but this is a great year.
There's a look at the Dow. Jim, what do we got coming up on Mad Money tonight?
Oh, my, we got Kevin Johnson. I'm so excited, KJ Wood, because we get to ask about China. We ask about pumpkin. We ask you about nitro. David, it's cold drink. Have you had nitro?
I have not.
I didn't sleep for 2 days.
Really?
Yes.
Just what you need.
Yeah, it was like, if I had sterno, it would be less powerful than nitro. But it's what the millennials want. They like chicken and they like nitro. And Kevin has done a remarkable job domestically. Let's hear about China. But cold drinks have a great... We got to see if people drink cold things in the winter. But they like that pumpkin latte. They're moving that up.
They're moving the release date for the pumpkin spice latte.
I think if you, if you have to stay up all night for a football game, nitro.
Nitro. Got it. All right. I'll see you later. Coming up, the Trump-Macron news conference live from the G7 in France.
There are certain things in life we simply don't talk about, and hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
You're in charge of hiring and Indeed has solutions, like our library of job description templates which are free and easy to customize. We also give you the pigeon of perception, who only coos when you find the perfect CV. Or when he's hungry. Okay, no pigeon then, but there are free job descriptions.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/start today to use our library of completely free job description templates. Terms and conditions apply.
Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
At Wickes right now, there's buy one, get one half price on all paint, including great brands like Dulux, plus all undercoat gloss and emulsion. Ends today. Terms apply.
At first, we were worried about using purple bricks, but since we sold with them, I haven't been able to stop going on about them, have I, dear?
No, love.
I've been telling everyone. Family, friends, that confused guy at the supermarket.
Yeah, you haven't really shut up about that.
But seriously, did I tell you about our purple bricks estate agent, Michael?
I met him too. He was nice.
We could talk to him whenever. Anything we asked, he could do it.
That's enough now,
He
dear.
was brilliant, always available to chat on the phone.
Enough,
I
Robert.
could email him any time of the day or night.
Purple bricks. You'll be totally sold.
Fixed fee payable on instruction or after 10 months. Viewing services cost extra. See website for more details.
Good Monday morning and welcome back to Squawk on the Street. I'm David Faber along with Sarah Eisen. We are live from Post 9 at the New York Stock Exchange. Carl has the morning off this morning. And we begin, of course, with the markets. They are rallying well off the highs, though, reacting to seemingly every comment or tweet from President Trump. Of course, he's been overseas at the G7 summit. Earlier today, the president saying China called U.S. trade reps and asked to, quote, get back to the table for talks. That said, the editor, however, of China's Global Times, he is viewed as a direct conduit to the Chinese government, followed with a tweet saying both sides, quote, didn't hold phone talks in recent days and that China won't cave to U.S. pressure. President Trump and French President Macron are set to hold a news conference at the G7 summit in France. And, of course, we will take you there as soon as it begins. Sarah, we're waiting to see. Apparently, it's going to be 2 questions for each gentleman, but oftentimes they go well beyond that.
So President Trump says, you can say we're having very meaningful talks, much more meaningful than I would say at any time, frankly, which led the market to rally, which was somewhat surprising after the news events of the weekend and Friday. I mean, Friday, the Dow finished lower more than 600 points. It was down more than 700 at the lows. The tweets marked a sharp escalation.
Yes.
He followed up with tariffs, as he said he would, after the market closed.
Increasing the existing tariffs by percentage
Correct.
points, right?
And then threw the markets for another loop this weekend, saying, first, maybe he went too far, then walking that back and saying he wishes he had only gone. I mean, this is very unusual sort of volatility, and it makes you wonder what an investor to do.
Many throw their hands up, the ones I've spoken to, and simply say it's a very difficult market in which to allocate new capital, certainly. And what you're going to do is not make meaningful decisions. So you're going to choose to sit on the sidelines for a bit because you can't trade every headline, especially given how they can be diametrically opposed within minutes. We should point out the Chinese Foreign Ministry spokesman telling the Wall Street Journal as well, he was not aware of such a phone call by China to the U.S.
Meantime, the Chinese currency had an 11-year low because the fundamentals in China are weakening. They get hurt, of course, when the U.S. puts more tariffs on them. And, overseas markets also. South Korea, Germany, these are all export markets that depend on China and that get hurt when the U.S. and China have this trade friction. I think one thing that's potentially encouraging for investors is that the Chinese continue to come to the table for talks, even though the tariffs continue to get raised and hurt their economy and pressure them. And maybe that's because, they're feeling the heat. They don't. The best I can tell from all the currency desks and the research notes overnight is they don't want their currency falling like this. We're past 7.1 to the U.S. dollar. I mean, that starts to raise concerns about what's happening underneath the surface, about capital flight, all of those sort of bad things that they want to try to avoid.
Although, and again, this is not a science, but what I'm hearing from those who at least are having interchange with the Chinese leadership is that they may be happy to sit back for a while, Sarah, and sort of watch and wait and see how things play out. They want to emphasize the interdependence of the two economies. They want our political leadership to understand that, and perhaps it's going to take a little bit more of a sigh in the world economy before people truly can sort of get back to the table. We'll see.
And nobody knows, and that's why it's live or die by tweets.
Yep.
Let's get to Eamon Jabbers live from France this morning with the latest, Eamon, on where we are with China.
Yeah, good morning, Sarah. So here's the latest. I just told you that we were expecting to see this press conference between Macron and Trump at 10:30 East Coast time based on the guidance that we'd been getting. Now we just have a statement in from the White House press secretary, Stephanie Grisham, saying the president continues to work hard on behalf of the American people and is still in meetings. We will try to keep you posted on timing of this press conference. So at this point, not clear when that presser is going to happen. We were expecting it, as I say, about a half an hour from now. One of the questions that reporters are going to want to ask the president is, can you give us some more detail about this call that you say happened between the U.S. and Chinese side overnight? The president was pressed on that earlier when reporters got into one of the bilateral sessions. They asked him to clarify or offer any more detail on those calls. And here's how he responded to that question.
We're talking about calls. We've had calls. We've had calls at the highest levels, but I don't want to talk about that. But the vice chairman put out a statement last night that was a statement and saying that he wants to make a deal and he wants to.
So the president said earlier in the day that there was a call between the U.S. and China side, then asked and pressed by reporters. He said, I don't want to talk about calls. We've had calls at the highest level. Nobody that we've talked to has been able to offer specific details about who called who, what was said, whether there's a new timetable for negotiations or anything like that. So I think that will be question number one. And then, of course, there are a whole host of other questions. The bilateral relationship between the United States and France, which has been testy at times. The U.S. approach to the entire EU. Boris Johnson is here. The question of Brexit. So many questions to hear from the president on. But now, at this point right now, not sure exactly when we'll hear from him. Things are fluid here in France, guys.
So, I mean, just to read into what you're saying, Eamon, it feels like the president is caught between wanting to go hard and tough on China and not wanting the market to fall apart. Is that what the tension is?
Sure. Well, he clearly has both imperatives in mind, right? And you saw this sort of odd moment over the weekend where he was asked if he has any second thoughts about the China trade war, and the president said, sure I do. I have second thoughts about everything. And within moments, White House press aides were scrambling to explain that because a lot of people said, okay, the president's now softening his stance on China. The way they explained it was to do two things simultaneously. One, they said the president didn't hear the question about whether or not he had second thoughts. And two, an entirely different explanation, they said what the president meant to say was that he had second thoughts about not being tougher on the Chinese. That is, he should have gone harder on the tariffs on Friday. So two entirely different explanations for the way the president responded to that question. But the bottom line is the White House didn't want anyone to get the sense that the president is backing off here on the China trade war. Then we hear these comments from the president last night about a phone call or 2 phone calls that went back and forth between the U.S. and Chinese sides. The market obviously likes what it heard there and is responding to that now. But we'll see whether the president can offer some more specifics on it when we see him.
Well, for now, we're in rally mode. Dow's up 200. Semis are on pace for their best day going back to August 19th. Eamon, thank you. So how should investors be playing all of the twists and turns with the possibility of more presidential tweets and comments out of G7 on the way? Joining us now, CFRA Chief Investment Strategist Sam Stovall and Baird Chief Investment Strategist Bruce Biddle. Sam, you run a research shop. I mean, so are you guys trying to psychoanalyze the president at this point? I mean, what does an independent research firm do right now?
Well, I think what you try to do is to take it purely from a fundamental perspective. But I think even as we're experiencing, we're having a top-down turmoil from the trade tensions, et cetera, because should we end up with a more heated trade war, then that probably would throw the global economy into at least a soft spot, if not recession. And then what about those earnings expectations that we have for the coming year? I mean, right now, we're only looking for 1.2% growth for all of 2019. And that's well below the 5% when we started the year. So I think the analysts are doing the best that they can by talking to management, getting some guidance from them. So the guidance they're saying is not coming from Washington. The guidance is coming from management itself.
What's your best read now on corporate confidence and business investment? We got a durable goods number, which on the headline looked okay. I mean, there are some complaints underneath, but obviously the Fed has been worried about capital spending. So where exactly are we in corporate America?
I think that we're in a good spot, but we could be in a lot better spot if we had more clarity as to which way the market was actually headed in terms of what the trade situation was likely to be. I think that based on Fed president comments last week, they were probably setting us up for the possibility of their not cutting rates at the September meeting. We had 3 Fed presidents say we really didn't need to do it in July. We probably don't need to do it in September. We had economic data come out stronger than expected. We had corporate profits, particularly on the retail side, that surprised to the upside. So I would tend to say that prior to that tweet, the Fed was sending out trial balloons that they would not be cutting rates in September.
Bruce, you know, we talked here a lot about the uncertainty, both from an investor perspective in terms of how you deal with the back and forth between China, but also from a CEO perspective in terms of how you allocate capital. Is that impacting at all your view of the overall market?
No, it certainly is. I mean, confidence is very critical to a CEO's decision-making process, and certainly the trade situation and what the Fed may or may not do is certainly impacting that confidence. But I would say this, I was pretty impressed with Powell on Friday for 2 reasons. First of all, he hammered home the idea that the Fed was an independent actor. And 2, more importantly, Powell showed no sign of panic. And in my mind, that helps CEO confidence significantly. The fact that he did not panic and did not indicate a 50 or a 70-point increase in the Fed funds level, I think is very significant. So I was happy with that. And if you looked at the markets on Friday, as soon as Powell finished speaking, the markets began to firm up. And it was only when China burst in, raising the temperature of the trade tariff situation, that the markets plunged. But the markets were pretty confident in what Powell had to say.
Sam, is there a place to hide from all this in the market itself and just sort of say, okay, I mean, there's some fairly high yield paying stocks at this point, but as well, are there sectors that are just not going to be impacted broadly from this back and forth?
Well, take it from the traditional perspective. When the going gets tough, the tough go eating, smoking, and drinking, and if they overdo it, they have to go to the doctor. So your traditional staples, healthcare, utilities, to a lesser extent, real estate tend to hold up better.
Even though they're getting expensive?
Well,
some of them, utilities,
yes, absolutely.
Staples.
I mean, in terms of a flight to safety, that's where they'll go. However, should we find a resolution to this trade discord, then people will be migrating out very quickly from these defensive because they are so expensive. Usually, those that fall the most in a sell-off are the ones that recover most quickly should the all-clear signal be sounded.
Bruce, what are you telling your clients as far as where to take exposure right now in the markets and how to hang in amid the tweets and the twists and the turns?
Well, it's been the same for us for most of the year. We've been recommending defensive sectors ever since January and haven't really come off of that at all. And the irony about that is that the defensive sectors are the ones that have been on the offense and they've been showing gains. And actually, some of those sectors are actually up for the month of August. So we're still sticking with those for the time being. I think that there's a sense that the economy is really critical to this environment. Now, with that said, I think we need to take the longer view about the stock market. We've been sitting in the same place, basically, in terms of the S&P 500 since January of 2018. And I think that's simply a reflection of the deceleration of corporate profits. And if we're looking for a sustainable rally in the market, I think we're going to have to wait until profit expectations and profit forecasts improve. And I think that could happen later this year or early in 2020.
Finally, just quickly on the Russell 2000 of small caps, it's been beaten up harder than the rest. Does that follow that if you do see optimism or light at the end of the tunnel with the trade friction with China, that would bounce faster than the market?
You would think so, but
higher?
I believe that if we don't get that kind of a bounce to go along with it, that could be an early warning signal that there's more behind this problem. I mean, this could be like April of 1998 all over again, when it gave you an early warning 2-year advance signal that this market was headed for a very sharp sell-off.
Wow, Russell 2000 down more than 15 from the highs %. Sam and Bruce, thank you very much.
All right, let's get to our ETF spotlight. Mike Santoli's taking a look at consumer discretionary stocks, which have been outperforming industrials amid the trade war. Mike.
Yes, David, they absolutely have. So that has become a pretty conventional wisdom type observation that the U.S. consumer remains very strong, perhaps the strongest pool of economic activity in the world. Industrials pressured a little more by the global slowdown and those trade issues. But take a look. So this is the traditional consumer discretionary and industrial S&P ETFs. You see over a 1-year basis, clear outperformance here by the consumer. However, I did also want to modify this a little bit and look at the equal weighted versions of these same sectors, and it's actually quite a different story. The equal-weighted portfolio of industrial stocks have held up better than consumer stocks. Why is that? Because if you look at the consumer discretionary ETF, the XLY traditional one, there we go. It's 1/3 of it is Amazon and Home Depot. So the average consumer discretionary stock has not outperformed the average industrial stock. And so this is something I think that probably points to the secular challenges in front of retail and autos and other parts of consumer discretionary. But so even within a strong part of the market, consumer discretionary, it has a relatively defensive tone, and the market seemingly kind of clenched up for something in the way of a slowdown or a little bit of consumer weakness on the way, guys.
All right, Mike, thank you. Mike Santoli. When we return, we're going to have much more on today's rally, how to play the volatility as we await President Trump and French President Macron's joint news conference in France. We'll take you there as soon as it happens. Squawk on the Street will be right back. Dow's up 133. Don't go away.
Do you have concerns about mild memory loss related to...
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront Outlet Shopping.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you free clones of your best employees. What's that? Oh, no cloning. But there are online skills tests.
Using Indeed skills tests reduces time to hire by 27% on average. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Fancy throwing something different on your barbecue this summer? At Asda, a pack of 2 cod fillets are only £3.19. And a 4-pack of Grower Selection sweet corn cobettes are just £1. Bring it home with Asda. Save money, live better. Selected stores online subject to availability. Card 260 grams.
At first, we were worried about using purple bricks, but since we sold with them, I haven't been able to stop going on about them, have I, dear?
No, love.
I've been telling everyone. Family, friends, that confused guy at the supermarket.
Yeah, you haven't really shut up about that.
But seriously, did I tell you about our purple bricks estate agent, Michael?
I met him too. He was nice.
We could talk to him whenever. Anything we asked, he could do it.
That's enough now,
He
dear.
was brilliant, always available to chat on the phone.
Enough, Robert.
I could email him any time of the day or night.
Purple bricks. You'll be totally sold.
Fixed fee payable on instruction or after 10 months. Viewing services cost extra. See website for more details.
With Rapid Insurance on Vodafone Business, we'll get a replacement phone to you within 4 hours. So if you should...
Oh, no.
Or even... Just get in touch and we'll...
Your replacement phone, sir?
Your phone replaced within 4 hours with our Rapid Insurance. Available on our new and limited data plans. The future is exciting. Ready? Vodafone Business.
Max download upload speeds apply to data. Coverage may vary. Unlimited and rapid terms at vodafone.co.uk/terms.
Set for Life is the new game from the National Lottery where you can win 10 grand every month for 30 years. So go smash this month, next month, and make every month amazing. Play new Set for Life Mondays and Thursdays.
Set for Life from the National Lottery. Amazing starts here. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
All right, let's get back, of course, to U.S. trade, China tensions, and the impact on the markets. For that, we're joined by two China experts. Sean King, Park Strategy Senior Vice President and former U.S. Commerce Department Senior Advisor for all of Asia. Also with us, Jeff Moon. He's the President of China Moon Strategies, a former U.S. Trade Representative for China. Jeff, give me your best guess as to where we go from here between the U.S. and China, given everything we've heard over the last 48 hours or so.
Well, I think the market's making too much of the call that may or may not have happened between the U.S. and China. Clearly, Trump didn't participate, Mnuchin didn't participate, Lighthizer probably didn't participate. So if anything, there's something at the working level. But really, we Americans assume that it's all about us. And you really need two sides to make a deal. And from the Chinese perspective, they want to put the substantive discussions on pause until October 1st. They are preoccupied with their domestic celebrations of the 70th anniversary of the People's Republic, which cannot include mention of foreign concessions. And they can't make concessions while there's unrest in Hong Kong because that would encourage the protesters further. So I think beyond October 1st, there may be a narrow window between that time and the Iowa caucuses in February 3rd when the U.S. presidential election gets into full swing. There's an APEC meeting in November, and there is a narrow possibility that if both sides really want to make a deal, they may, in that window, be able to do something. Because after the campaign season gets really started, I just don't see a deal before the election.
Yeah, there are plenty of people who agree with that. Sean, you're a China hawk.
Right.
Is this the way you would go about prosecuting, sort of trying to get a good deal from China in terms of trade?
I would not. And even if we get a deal, what does it mean? We're dealing with a Leninist dictatorship that doesn't let its own people vote or access Facebook. Why would we expect them to treat us fairly? It would not be up for a congressional vote. There'd be no means of enforcement beyond other tariffs. I think we get too hung up on doing business with mainland China. Trump orders companies out, but he doesn't give them options. Why did we leave TPP, which was sort of a trade version of NATO, against Beijing? Why is he picking fights with Vietnam and India? I'm glad we have this apparently in principle deal with Japan. I haven't seen the details. I'm sure it's not what we would have gotten had we stayed in TPP, but Trump seems to be starting fires everywhere. I'm with him on China, but we shouldn't be fighting with our friends at the same time.
So you're with him on the overall goal, but the execution is not what you'd hope.
I'm with him on a reality check for China. I think it's been a generational shift into China. When U.S. manufacturers offshored production to other Asian countries in the 60s and 70s, we eventually followed those suppliers into mainland China. This is part of an Asia story, not just the China story. So the genie is out of the bottle there. But I think we need to be giving company options around China. Tariffs, I'm willing to be convinced, but forced import substitution in a developed economy rarely, if ever, works. And at the very least, Trump has to be honest about who's paying the tariffs, because it's not Beijing.
But so what do you tell a company like Apple or Procter & Gamble? There's what, 1.4 billion people in China. It's the hottest growth market for so many American companies. They'd probably want a better playing field. They probably wouldn't want to have to deal with intellectual property theft and forced joint ventures and all these other issues. And yet they need access to that kind of growth. So what does a Tim Cook do? What does a CEO of a multinational company do that's there?
Well, Trump loves Tim Cook because he always calls him directly and doesn't hire expensive lobbyists like me. But, you know, you get what you pay for. If you are willing to do business in a country that doesn't let people access Twitter, go to church, vote, or speak freely, I think you kind of deserve what you get. You should be looking at other options around China, and if things happen